I did not drop out of college to invest my tuition dollars. I dropped out of college for other reasons, but I took those tuition dollars and invested them. And it just so happened to be at the very bottom of the crash of 2020. Make sure to subscribe for a bunch of videos. Subscribe to my second channel, which is my backup channel for exclusive bonus content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. And of course, last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. You can deposit as little as you'd like, even as little as a penny. It still works, it still counts. You still get your up to 12 free fractional shares. Webull link in the description. Everything is linked in the description. All right, so today, just like every day, is a video to listen to rather than a video to watch, unless of course you want to watch me go for a walk through the woods. Treat it like a radio show, treat it like a podcast. When did I invest a majority of the currency that I have invested today? It's at the very bottom of the market crash of 2020. You know, I did something that, you know, most people wouldn't really advise doing. And I didn't do it for this reason. There were a couple of factors that played a role in my decision. But basically, I had no option. I had to postpone my college education. I dropped out of college at the time just because, there was a worldwide, catastrophe going on. It wasn't really my priority to be, forking over thousands and thousands and thousands of dollars for courses. So anyway, I did not drop out of college to invest my tuition dollars. I dropped out of college for other reasons, but I took those tuition dollars and invested them. I did not drop out of college specifically to invest. I dropped out of college for the reasons that I had to drop out for, and then I took my dollars and I invested them. And it just so happened to be at the very bottom of the crash of 2020. And I continued doing so throughout the year of 2020 because the market crashed and it didn't just, automatically start climbing back up. It crashed and it just stayed down at the bottom. It hit the floor and then it stayed on the floor for quite a bit of time. So I invested all those tuition dollars and then I continued to invest throughout the year while the market was just as low as it was when it crashed initially. If anything, maybe in certain areas, it actually fell down even more. So I got everything at a discounted price. I wasn't, buying into index funds at that time. I was buying individual stocks. But overall, my entire portfolio is up like 22, 23, 24%. And that's not year to date. Year to date, I don't know if I even have those numbers at the moment. Let me see if I could pull them up. I'll just keep on talking while I'm trying to figure this out. But overall, I'm up over 20%. Year to date, my portfolio is up 7.39% at this time. In, the first week of July 2023. Year to date, I'm up 7.39%, and altogether, at least this one particular portfolio, I'm up 24.07%. And that's because a massive portion of my portfolio was purchased throughout the entire year of 2020 when the market bottomed out and it stayed low, and I just kept buying and buying and buying and buying. And yes, I bought on the way back up as well. I bought at the very bottom, I bought at my way back up, I bought at the very tippy top, I bought on the way back down, and I've been buying, while we've been moving kind of sideways, and obviously this year we've been moving in an upward direction, and I've been buying every single day as well. Monday through Friday, as long as the market is open, I make a daily contribution into, at this point, two different index funds in my regular investing account, a weekly contribution into 4 different index funds for my Roth IRA. I have a 40-40-10-10 split. And by the way, as I mentioned earlier in the video, if you want to set up an account on Webull, they're going to give you up to 12 free fractional shares just for doing so and making a deposit. You can open up a Roth IRA on Webull as well. It's a tax advantaged account where you take your dollars that have already been taxed, you already received your paycheck, you put them into the Roth IRA, they compound over time, and you can cash out upon retirement completely and entirely tax-free. So Webull link in the description if that's something that you're interested in. You don't have to create a Roth IRA. You can just use it as a stock trading app or whatever you want to do. It's completely your call, but they're going to give you up to 12 free fractional shares just for doing so. Webull link in the description. Okay, so I make a daily contribution into 2 different index funds every single day, as long as the market's open, Monday through Friday, every single day, 2 index funds. Every single week, I make that weekly contribution into my retirement account, my Roth IRA, a 40-40-10-10 split between 4 different index funds for maximum exposure, and it's balanced in a customized way. I chose the index funds and I chose the 40-40-10-10 split. I want 40% to go into the S&P. I love the S&P. 40% to go in an even broader index fund, 10% to go into a different type of market, and 10% to go into a different type of market, just for, you know, maximum exposure. And I chose that split because I didn't want to be overexposed to certain markets. Could have gone 25 25 25 25, but no, that's not how I wanted to balance it. So I continue to do that. I continue making daily contributions. I've been making daily contributions for, at this point, over 2 years. Every single day, no matter what the market is doing. I don't care if we're up. I don't care if the market opened up 100% for the day. Still buying in every single day. I don't care if we're looking at a market crash. I don't care if we are moving sideways. In fact, I don't even really care what the market's doing. I don't even pay attention to what the market's doing anymore. I don't care what's up, what's down. I don't look at anything. All I know is that I have a 9:29 a.m. alarm that goes off every single day. It gives me 60 seconds to grab my phone, jump into my account, and make my 2 daily contributions into those 2 different index funds every single day. And then I put my phone back in my pocket, and then I completely forget about it until 9:29 the next day. Every single day upon market open, boom, jump into 2 index funds every single day. And every week, you know, on payday, I do the same thing with my Roth IRA. Don't care if we're up, don't care if we're down, don't care if we're green, don't care if we're red, don't care if we're purple. And I've been doing this for a while now. And I'm still up. Even though I was making daily contributions at the very, very, very top. And making contributions at the very, very, very bottom. Still up 24 point whatever percent. My Roth IRA, on the other hand, I opened up about 2 years ago. I was not maxing it out at the time, though. I opened it up toward the end of the year, I think in 2020, I think at the end of 2021, so I didn't even have enough time to max it out for the year. 2022, I was not on track to maxing it out. I was making a monthly contribution at the time, and it wasn't enough to max it out. My goal wasn't even to max it out. I just wanted to make contributions to it. Then toward the end of last year, I decided, hey, from here on out, I'm going to make, I'm going to make the most of this. So ever since toward the end of last year, I increased my contributions, and now I'm on track to maxing it out for this year, and I plan on doing the same next year and every year following. So that's basically what my strategy has been. And I don't see any reason at this time for me to change my strategy. One thing I am doing at this time is I've actually lowered my daily contributions because I want to save some cash for September. Almost every single year in September, it's called the September effect. We see, we see a decline in September almost every single year. It's called the September effect. it's just a change in consumer behavior, and a lot of the big top dogs realize that, okay, now we're in the fourth quarter of the year, it's time to readjust or reallocate or liquidate and switch things up a little bit, and we see a decline almost every single September. It's like clockwork. 2 years ago in September, I was aware of it, but it slipped my mind, and it kind of caught me off guard. I was like, man, if only I had remembered, I would have spent the entire month of July and August saving up. That's what I said. I would have spent the entire month of August saving up for September. And I was like, next year I am going to take full advantage of this. I'm going to reduce my expenses and do what I need to do to make more money in July and August, save as much of it as possible, and then, hopefully be able to invest double or triple in September if we see the notorious September effect. And that's what I did last year, because 2 years ago it slipped my mind, and, I was kind of kicking myself for it. I was like, man, I wish I remembered. I would have prepared myself for it. But next year, you better believe that's what I'll do. The following year, that's exactly what I did. In July, I applied for a part-time job. I was like, hey, you know what? That's what I'll do. I'll do what I need to do to make, as much money as possible and save as much money as possible, and I'll get this part-time job for extra money, and I'll just hold on to the cash. And then in September, if and when we see that September effect, then boom, I'll have an additional stream of income, and I'll just drop it all in there. So that's what I did last year, and it worked out very, 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 very well. Well, this year is no different, except I'm not going out and getting a new part-time job for that. I've since switched up my my jobs and whatnot, which I've explained in other videos. I was working a full-time job at the time, and I got a part-time job, partially for that reason. And then, a couple months down the road, I flip-flopped them. I took my full-time job, stepped down to part-time, and I took my part-time job because I was offered full-time. Yeah, that's what I've been doing for the last year. Or just about, coming up on a year. 11 months. August 10th will be my date of hire at my current full-time job, which at the time was the part-time job that I got partially to prepare myself for the September effect. This time around, I've reduced my daily contributions. Still making them, but half as much. And I've been doing this since last month, so throughout the month of June, I've reduced how much, I've been, saving a little bit extra cash. This entire month of July, I'll continue saving that extra cash. All throughout August, I'm going to be saving that extra cash. And then in September, if all goes according to plan, I will be relatively cash heavy, and hopefully we see the September effect. Hopefully we see a pretty rough, brutal month this September 2023. Hopefully we see far more red days than green days, as we typically do. Now, this isn't typically advised. You shouldn't try to time the market. I'm not really trying to time the market here. All I know is that almost every single September, we see weak returns. And if we end up not getting a September effect this year, even though we do almost every year, if I'm wrong this year, then all right, so be it. I saved up some extra cash, and I'll just invest those dollars anyway. There's no real losing. If I invest those dollars at normal prices, it's a win. If I invest those dollars at discounted prices, it's a win on top of a win. There's no losing here. Oh, but the market could jump up dramatically. Okay, then I lose out on, 3 months worth of gains when I plan on doing this for the next 30 plus years? Who cares? What do I care? September effect is fun. Saving up for it, and I'm hoping that I get some discounted prices this year. Anyway, that's basically what my strategy has been, and how the strategy has evolved over time, and what I've been, you know, experimenting with. This year I opened up, it's either this year or last year, I don't remember exactly. I want to say it was this year. I opened up a high yield savings account so I can save up currency for something that I want to purchase or something that I want to invest in. I opened up a CD account just because I wanted to be able to talk about my experience with a CD account. I've never had one before, and I wanted to try it out and see what happens. And if all goes according to plan, by the time my maturity date hits, which is February of next year, if I can still get my hands on a high yield, I'll roll that currency into a new CD account, and I'll lock up that currency plus the interest it generated plus more currency that I had saved up for a longer term and generate, you know, a guaranteed fixed rate. Certain amount of money for a certain amount of time for a very specific interest rate. If rates are still high at that point and I can capitalize and maximize it, then that's exactly what I'll do. If not, I'll put the currency elsewhere. That 401k that I've been waiting to become eligible for is finally being opened up within the next 5 to 7 days. Just got the promotion. I was going through the benefits and figuring out what I wanted, what I didn't want, and just kind of customizing the package my way. I've realized that an HSA is offered, and if you go with the HSA, the company actually puts $250 a year into it. So that's one thing that I will be, or that I'm currently utilizing. And there's a couple different ways you can go about making the most of these tax advantaged accounts. Got the Roth IRA. I got a bunch of different things going on, and I'm doing all this on not an extraordinarily high income. You don't need an extraordinarily high income to do any of these things. You can invest with as little as $5, which, by the way, like I said before, if you download Webull and fund your account, they're going to give you up to 12 free fractional shares just for doing that, and you can invest as little as $5 on the Webull app. You can do this just through a regular brokerage account. You can set up the Roth IRA, which is a tax advantage retirement account. All you need is $5. You might be thinking to yourself, $5 might not get you all that far, but okay, yeah, sure, absolutely. But what happens if it's $5 every single week for years and years and years? With dividends reinvested, which gets the snowball rolling a little bit more, it all levels out. It'll add up. Not to a tremendous amount, but it will add up. That's what the compound effect is. That's what the snowball effect is. And $5, it's not, you know, a very impressive amount of currency, but guess what? It's a start. That's how I like to see it. That's how I like to explain it. And probably gonna end up thanking yourself long term. So point being is that you don't need a tremendous amount of currency to do these things. To max out a Roth IRA, if you want to do weekly contributions to set yourself up for maxing it out, it's $125 a week, which might sound kind of steep to some. My HSA, my health savings account, I'm just doing a small amount, $10 a week. My daily contributions, that can fluctuate in my regular investing app in the 2 different index funds that I use. That fluctuates. And when my 401k is set up, I'm gonna set it to 5% because my company gives me a 5% match. I feel as though it would be irresponsible to not make the most of that right there. I should probably maximize on that 5% match. If they're offering to match up to 5%, I feel like it would be to me, it just seems irresponsible to not make the most of that. Why not take every single penny that they are offering? So anyway, Point being is that you don't need a tremendous amount of currency. You don't need to be a high income earner. I am not a high income earner. And by utilizing some of these tax advantaged accounts, you actually lower your taxable income, which, you know, pays off in the short term and the long term. So it's just something to think about. If anyone has any questions regarding the different types of accounts, if you need any information or resources on the Roth IRA or an HSA or just a regular investing account, just leave a comment in the comment section and I'll try to maybe answer your question via video. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive bonus content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. Sugar-free, low-calorie, packed with a whole bunch of vitamins, over 50 different flavors to choose from. This one right here is Miami Nights. It's like a pina colada flavor. It's actually my favorite flavor of all time. $5 off your first order by clicking the link in the description. And of course, as I said before, make sure to get your up to 12 free fractional shares. By downloading Webull and funding your account, you could deposit as little as you'd like, even as little as a penny. It still works, it still counts, you still get your up to 12 free fractional shares. You can start investing with as little as $5, and of course, you can even set yourself up a Roth IRA on the app. Webull link in the description. Everything is linked in the description.